On YouTube. My name is Ty, back with the Dividend King, Stock King channel. Here we talk about stocks, getting paid dividends, and the stock market in general. Today's question is, what stock would I buy into during a recession and why? And I looked and looked for a good solid one, and I found one. Um, this was called CLM, Cornerstone Strategic Value Fund. So first of all, what is a fund? Had in Google, a value fund is a fund that allows a value investing strategy and seeks to invest in stocks that are deemed to be undervalued in price based on fundamental characteristics. Um, Value investing is often compared with growth investing that focuses on emerging companies with high growth perspective. So pretty much a value fund invest in stocks that are underpriced and undervalued, and they buy those. A growth fund invests in stocks that's growing as we speak. They're going up. That's what I'm looking at right now. So the top 10 hold, it's like an ETF. For me, fund is like an ETF. ETF holds different types of stocks. This is the same way. So the top 10 holdings is Microsoft, Google, Amazon, JP Morgan Chase, um, Adams Diverse Equity Fund is another ETF too, or fund. Berkshire Hathaway, Cisco Systems, Mastercard, and Home Depot. Um, for the total, so here I have another website here, Morningstar, Cornerstone Strategic Value Fund, and here's the total holdings: 25 top holdings, top 25. It probably has more, but I couldn't really find more. But top 25 is the ones I just mentioned. But it has Johnson and Johnson, it has Verizon, Procter and Gamble, Intel, Apple, Boeing, Visa, Walt Disney, Comcast, Bank of America Corporation, Exxon, and Walmart. So it's a solid fund to invest in. And during a recession, these companies will take a hit, but not gonna take a big hit. Okay, they're not gonna take a huge hit. So just look at Microsoft is not going to take a big hit. Google is not taking a big hit. Amazon is not going to take a huge hit. JP Morgan, that's not going to take a big hit. Mastercard, everybody uses the Mastercard or Visa. Home Depot is never going to take a hit. I mean, Home Depot would never take a hit. Home Depot and Lowe's would never go out of business because people, um, let's say, buy everything from Amazon, but Home Depot is very convenient. I mean, it's Amazon takes a day or so to get to your house, and then it might not be the right thing, and you gotta go to, and then like with Home Depot, you know, if I order, let's say I buy I don't know, a saw, you know, if I don't like the saw, I go back to the store and get my money back. With Amazon, I gotta wait 1 or 2 days, and when it gets here, if I don't like it, I gotta go to Kohl's or something, return it, get my money back. So Home Depot and stuff like that would never go out of business because you can go in there and get, you don't need Amazon to ship you I don't know, a whatever, some small like a screwdriver. There's no reason for you go to Amazon to buy screws. You could go right to Home Depot and you can ask for help. That's a good thing about Home Depot and Lowe's. You can ask for help and people will help you what you gotta just do. So these companies, in my opinion, this is my opinion, this is my thoughts. Okay, so do your own research. But these companies will probably be strong during a recession. Boeing took a lot of hits, but they make airplanes, so they'll take hits, but they'll be okay. Apple is not going anywhere. Everybody have Apple phones. Verizon is not going anywhere. It may take some hits because of 5G, and people don't want 5G, including me. So that might also take a hit as well. I believe it will take a hit. But the top 5 companies are really solid and good. So I will invest in this stock or fund as well. And also, what's also cool that it doesn't cost a lot of money. Let's go to strategy here, summary. Look at the past, do 5 years. Look at the past 5 years. It's been steady. It's been steady. It probably went down. It went down some, but it's always been a steady fund. Okay. Look at the dividend yield. There's no dividend growth here. 18 cents per share. That's a pretty nice dividend for a fund. It pays monthly. So dividend history, um, you see here they always pay a dividend. It was up last year by 20 cents. The year before that, it was 23 cents. So it probably dropped down because they probably took some stuff out and put some new stocks in. But they pay a month, an 18 cent month dividend, which is pretty nice compared to the price. I mean, I know some stocks now, like LTC Properties, they pay 19 cents, but it costs 35 bucks. So, sometimes you gotta weigh your options of your money. Do you want to invest in this fund and be a little bit safer bet? The LTC, it pays a good monthly dividend, but pays 19 cents. It's pay 18 cents. We could buy three of these funds for the price of LTC. So you gotta look at those too. But if I have some money to invest in a stock, which one I'm investing in? Those are the reasons why it would be CLM. Type in CLM. If you don't have Robinhood, I use Robinhood to buy all my stocks. Let's go to Robinhood real quick. I currently own, it'll load up here. It's always slow on desktop for some reason. I think I own I own 6 shares of it. I own 6 shares of CLM. I got a dividend already. Was coming up, but I bought a dividend. I bought 6 shares of this so far. Yeah, and it's found 1987. So it's been around for a long time. I got a dividend pending right now. I bought 5 shares at $8.94. And one up $9.13. So I saved some money on that. I bought one for $9.24. So not too much different. So yeah, that's it. I own 6 shares of this, so I'm not want to, here's my shares right here. I don't want to tell you a fund I don't invest in. There is one more by the same group, and it's called CRM, Cornerstone Total Return Fund, and it's just like another fund and invest in stocks that's underpriced. And look at this holdings here. It has pretty much the same as the other one. The top 10: Microsoft, Google, Apple. You got J.P. Morgan Chase, Procter and Gamble. You have Verizon, Comcast. So it's another fund, and I own 1 share of this as well, and this pays 18 cents. So the CLM pays 18. This pays 17. If I can find it really quickly. I hate the desktop version of Robinhood. And it's right here on 1 share of that, and it pays, I believe, 17 cents a share. But that's how I'm investing that. They're not expensive. They're very diversified. It's a fund. It's an ETF. You're more safer. Right now, my REITs and my other stocks are cutting dividends. Some that's paying monthly, now they're going to quarterly, and they're cutting dividends. So stocks are very vital right now unless you go to a blue chip. See, I own 1 share of this. I just bought this recently. I recently found this one. And I'm getting a dividend, I believe, 18 cents. So that's pretty neat too. It's pretty high dividend. It's going to cost $9, $8. It's pretty good dividend. So that's it for the video. Which I invest in long term would be CRF and CLM. I'll link up below the video of the ticker symbols. And also, we want to start buying stocks today while it's the best time to invest in the stock market. Everything's cheaper. I have a link to Robinhood below this video. Check me out, and make sure you do your own research. I'm just a guy on YouTube giving his info on the stock. So make sure you do your own homework on stock market. Don't take my word for it. My name is Ty, and this is the Dividend Stock King. Thanks for watching.